we're in this crazy time, this season that is so fascinating because you have so many different things converging all at once. And I'm so curious to know what you think is going to happen with the economy. Are we going to stay strong? I just talked to some experts that are like, hey, we're in the strongest place we've ever been as a nation. I've talked to other experts that say by the end of the year, we're going to be in a full-blown recession. It's so crazy how incredibly smart people can be on either side of the aisle at either extreme. And, I think that we have to prepare for both. I mean, part of what you and I both do is we have this mindset, this philosophy, this strategy of multiple streams of income, well diversified, just in case something goes wrong, you are hedging against your investments not performing, that you've got something at least that performs and creates cash flow if the economy is strong or if the economy tanks. And I'd love to get your thoughts, number one, on what you think might happen. And number two, how you're protecting against whatever it is that you think could come.
That's a great question, and the crystal ball game is the toughest game to play in. Very tough business. So with that being said, if you look at it, there's essentially two outcomes which you've summarized, but there's a very strong case that the inflation continues, and it's pretty bad. I think most people, that anyone that's been to the store lately, have seen what's the effects of inflation, this increasing currency supply, which has been done all over the world. You pick your country and your central bank; it's all over the place. And to throw some fuel on the fire, most of the time you have the same amount of goods, or maybe the goods and services increase in the economy. This time, there's actually fewer goods and services circulating in the economy, with more currency units chasing it. So we've really seen the effects. I mean, the numbers that have been thrown out is, 8 to 9%. And then you look at John Williams' shadow stats, it's more like 16 to 17. And we saw Congress gave their staffers and lawyers and so forth in DC a 21% pay increase. So you're figuring it's probably closer to 20% than to the 8 or to the 9%. So with regards to inflation, to keep this economy going, which is essentially now completely debt driven, after we've basically shut it off in 2020. The first position that I would take is you're probably going to continue to see inflation, and it's going to get much worse. So you're going to continue to see asset inflation, which is the increase of the values of all asset classes, which we've seen significantly. I mean, real estate that we love has been a huge benefactor. Obviously, the stock market, a lot of capital has flown there because a lot of money has been borrowed to buy back shares too, which is a completely different conversation. And then we've also seen cryptocurrencies benefit from that with a huge spike since 2020. So that would be my first way of looking at it. But we are living during incredible times. I mean, I'm pretty excited for the times that we live in. Like I said, uncertainty and chaos and disruptions is my happy place. I would not be surprised if there's a wild card event, which would come in many shapes and sizes. For example, one of the markets that is pretty interesting to watch is the bond market, the biggest market on the planet. It just dwarfs all the other markets. So the bond market pops, that bubble goes, everything else goes with it. The stock market, real estate market, essentially everything in this debt, money-based system, which we have. So how do you protect for it? You look at what the billionaires are doing again. They are always looking and thinking what they don't know, like, what's my blind spot? What am I not aware of? I need to position myself for anything and everything at this point. So, I've taken the approach of just essentially looking at 4 buckets, keeping things very, very simple. I've learned that when things get chaotic outside in the environment, you want to keep things inside of your businesses and your own wealth strategy very simple, so that it doesn't get confusing. But essentially, cash is one bucket. And, where would we keep cash? There's a counterparty risk to where you're keeping your cash. and cash itself is as a counterparty risk because it's fiat currency, but essentially where do you keep it? So, I wouldn't sleep well at night if I have large sums of money in banks right now. So just what I do is I love the insurance vehicle for my cash because these companies have been around since the mid 1800s. So from a counterparty risk management perspective, the probability is probably very high that they're going to behave how they've behaved since the mid 1800s. They've seen civil wars in the US, 2 world wars. They've seen all these economic booms and bust cycles and the Great Depression. So that's the one part of it. The second part of it, which is also still very defensive, is metals. Having some metals exposures in currency reset, and especially global financial resets, which I believe we're in right now. It's good to have things that have been money for centuries and that have held their value for centuries. So metals play a big part in the portfolio. And then the third bucket is the cash flow, just the cash flow portfolio positioning. And of course, you and I are very much aligned of diversifying income streams within the cash flow portfolio. So important right now. I think, unfortunately, people have found out the hard way that if one income stream gets taken away, and for most people that we're dependent on one, whether it's employment or just an asset class, and that goes away, now you don't have any income. So you want to be diversified there in certain different income streams. And then the fourth part is the growth bucket, where I like some cryptocurrencies in that growth bucket and some other plays, Bitcoin obviously being one of them. So if there is a inflationary environment, you still have cash that can be used to buy other things. Metals will hold steady. Your cash flow portfolio will benefit in your growth bucket. If there's a deflationary event, then obviously your metals will go down a little bit. Your growth bucket will get clobbered a little bit, especially if it's crypto. And your cash flow portfolio will just keep on trucking, but you'll have cash to buy assets at a discount. So, I'm always thinking of what is the blind spot? Where could there be a danger? But that's kind of my best thinking and insights at this point, just to try and put something together that's ready for anything and everything that's going to be thrown at us.